Hi, this is Chuck Oliver. Welcome to this week's Hidden Wealth Solution Review. Well, I want to teach you what you can do to have retirement tax avoidance. It's not just for those of you that are in retirement, but what you can do leading up to retirement. So whether you're trying to get to retirement or better through retirement, folks, the time to save tax and learn how to remove yourself from the tax system and have retirement tax avoidance is today. Let me teach you what David and Patty learned to do. Now, their goals were simple: save taxes and preserve capital. Now, here was their concern. They said, Chuck, we've had many of a financial planner or advisor, and our current planners are, and they plural, more than one, neither of them are addressing anything to do with taxes. And this is what really prompted us to reach out to learn the retirement tax road risk we're on. Well, folks, they had a lot of risk. What they were able to learn to do, they had a very much higher than normal recognized income year this year because of selling a business. On top of that, they inherited from his late father a sizable IRA, and the inherited required minimum distributions have kicked in. And all of these things translate to more taxes. Now, here's what they were able to learn to do. And I'll teach you this Tuesday at retirementprotected.com. They learned how to reduce their adjusted gross income by $300,000, saving them a little north of $100,000 of unnecessary taxes. And their big concern, because they have a large family, is they didn't want to leave a big tax burden to their kids, no differently than David's late father didn't want to leave a tax burden to him. But these inherited IRAs, folks, cause nothing but more tax. And one of the strategies we were able to teach them not only got rid of the inherited RMDs of the IRA of his late father, but we also were able to help them convert over $750,000 of IRA to Roth IRA with a proven plan over the next consecutive years in an accelerated fashion to where they will not have required minimum distributions and they will not run the risk of leaving an inherited IRA tax bomb to their children. And on top of that, this enabled them to create income sources by using these tax savings to avoid an unnecessary $12,000 a year of Social Security taxes. And they were able to build what we call the rich man's Roth, which is what the ultra wealthy have used and continue to use that I've been teaching and writing about for years. I'll teach you this Tuesday. All in all, they're able to leave approximately 5 times more, totally tax-free, remove themselves from the tax system, avoid having unnecessary tax to their Social Security, and getting their IRAs out of the IRS's crosshairs. Now, why is this such an important time to consider this? Well, we had a couple things that came through. Number one, we had an unfortunate report that just the private sector hiring rose just 145,000 in March. Sadly, this is worse, way worse than expected. So job growth has tumbled. Well, folks, that's less people paying into the tax rolls. Imagine this. In the same week, this past week, the IRS has released plans now to officially determine the allocation of this $80 billion that's collected on the backs of you and I, the taxpayers, through the Inflation Reduction Act, this silly bill that Biden passed last year. It's not going to reduce inflation, folks. It's only increasing inflation. We're all clearly seeing that. And $45.6 billion of that, now I want you to understand, is going towards enforcement and audits. They already know that the economy is getting crushed. People are not hiring. They're laying people off. Fewer people are paying into tax rolls. I'm teaching and preaching this regularly, and they're going to have to go find that tax from somewhere. Well, guess where that somewhere is? Well, it's from IRAs. Well, the top tax mistakes you can avoid for those that have incomes of $100,000 or more, which was an interesting article that came out this week from Forbes. And it basically said tax experts say that people who earn more than $100,000 should be generally focused on lowering their taxable income. Well, duh. I mean, yeah, you think? But one of the things that was in this article that had substance was neglecting not taking deductions that many people unfortunately aren't aware of. One of which I'll teach you reduces your adjusted gross income, and our clients received over an 87% tax deduction just in 1 year against that adjusted gross income. Now, why is this important? Well, there are a slew, according to the Cato Institute, a slew of tax increases in the Biden's new budget proposal for 2024, the fiscal 24 that will take effect later this fall. $4.7 trillion of increased taxes. Now, I talked about this recently, but here's the top taxes that are coming, folks. And I mean, they're definitely coming. Unfortunately, they're coming on the backs of taxing corporations higher, taxing individuals higher, increasing the Obamacare tax from 3.8% to 5%, increasing how much of Social Security gets taxed, increasing tax on corporations from 21 to 28%, increasing the capital gain tax rates all the way up to is a little north of 44% by the time you add the add-ons. And then to make matters even worse, they want to reduce the step up or eliminate, the step up in basis. The biggest wealth transfers in the history of our country are about to take place over the next 10 to 20 years, folks. Learn what you can do to have retirement tax avoidance. Avoid unnecessary tax to yourself, avoid passing unnecessary tax onto your kids, and learn how to do that today while tax rates are on sale. You've worked hard for your money. Let's get to work. Go to retirementprotected.com. That's retirementprotected.com. And log on and learn, folks. I'll teach you this Tuesday how you can be a low tax or a no tax retiree and take advantage of these opportunities while the window is still open and before it closes. Retirementprotected.com, retirementprotected.com.